Welcome back to Small Caps, ladies and gentlemen. My name's Kerry. Today I'm speaking with Dale Ginn. He is the Managing Director of Aston Minerals. ASX code is ASO. Now, for those of you that have seen it, and a lot of you did, I spoke to Dale at the end of November last year. We spoke about their project up in Canada. It is both nickel and gold. And at that time, the market cap was about 80 mil. Today, as I speak to you, coming into February, their market cap is 100 mil. There is a lot of news coming out from Aston Minerals. They have been working tirelessly. Today, we're going to speak about, because if you listen to the last one, there's a massive nickel-cobalt deposit up there, but also the gold is coming into its own. So today, there's a mineral resource estimate out for the gold project. We're going to dig deep into that one and find out where the value is and where Aston is going with this. Thanks so much, Dale. Great to see you again.
Yeah, thanks for having me. Just before Christmas, I guess, we spoke last.
Yeah, it was the end of November, and you were still being very busy. So now we've had Christmas, we had New Year. It's 2023. And you did say to me when we spoke, you said, I'm going to have a resource estimate out for the gold project, and you've delivered. So talk to us about it. And
Sure.
Why this is important. Is this a milestone in your opinion?
Yeah, it is, because it's a maiden resource. It's the first one for the project. It has shown a couple of things. We've basically proven that the resource, deposit that we started on is there and it's solid. But I think more importantly, we've shown about a 2-kilometer extension that added a lot of ounces. And that was just kind of our last days of drilling the gold that added those ounces. So it's encouraged us to keep going basically to the east because the rate that we added ounces was pretty phenomenal on that east end.
When you say it was pretty phenomenal, expand a little bit on that. I like the terminology, but expand if you could.
Well, it was basically half of the resource is the newer drilling from the Sorolla zone, which is an extension eastward. Basically, what happens is the Edleston zone continues east and then it runs into, I think I described it in the last time we talked, it ran into falls. We crossed that going east.
Sorry to interrupt you, Dale. We just had a little bit of an interrupt on the audio then. So can you just go back and say last time we spoke?
Okay. Last time we spoke, we were running into, I was describing how we were running into nickel-bearing rocks as we moved east, right, away from Edleston. So what happened is we kept going and we got back into gold zones, and we called them Sorolla. And we've got about 10 different parallel new gold zones. So we drilled those for about 1 kilometer and came up with over 500,000 ounces in our resource on the new Sorolla zone. And it's wide open another 8 kilometers at least on our ground to the east. So we feel there's a lot that could be added in terms of new ounces going in that direction.
With that drilling, talk to us about what sort of grades, how deep is it at surface? Is it nuggety gold? Is it gold in granite? What's the deposit looking like? Give us a bit more of info on that.
Well, basically, it's a typical setting for that part of the world in the Abitibi. It's altered volcanic rocks in contact with porphyries. And what happens there, it's situated on a regional fault, an east-west fault. Basically, we call it part of the Kirkland-Larder fault zone.
Okay.
And that is very typical. So what the Edleston is kind of a big bowl, if you will, of wide mineralization that's inside a fold, a big broad fold. As you move into the Sorolla, you get the more typical kind of east-west vein type deposits that you would expect along the Abitibi fault zone. But there's many parallel as I said, we hit at least 10. So we've got many parallel veins over kind of a width of, well, let's say a few hundred meters at least.
Okay.
And wide open again, as I said, to the east, where we would just continue basically following IP anomalies, which are likely mineralized veins or fault zones within the larger fault, which is the Kirkland-Lager Fault.
Does the Kirkland-Lager Fault come right through your project? And what are you doing right now? How many drill rigs have you got? This is the maiden mineral resource, and let me just explain. It's 1.5 million ounces at the project, and is it about a gram per ton? Is that right?
It's about a gram. If you push your cutoff grades a little higher, then the grade gets higher, but that's at a 0.4 gram per ton cutoff. We have 1.5 million ounces at just over a gram. That's correct.
So what's actually, just before we go into the forward bit, you were the one that brought this project to Aston, weren't you? Because you've known about this project for a while, and I think it's important if we can just unpack that a little bit. You've known about this project for a while. You got your hands on it. How did you get your hands on it, Dale?
Well, it was a spin out about 10 years ago of another company, a producing company, and I took the exploration properties and ran with those, and actually made the discovery about 2012, about 10 years ago. So we made the discovery, we drilled the initial Edleston zone, and then the market fell apart in 2013-14. And so the project sat idle for a number of years, and I was able to come back and get it. And once I showed it to Rob and Tolga, they were quite interested. There was some very, very big, hits, like 5 meters of 80 grams, that sort of thing. And, they weren't fleshed out at the time. So they were quite interested, and we rolled the property into what was called European Cobalt and is now called Aston, and started drilling on the gold. But of course, then we ran into the nickel along the way.
Yeah. Just a little distraction.
Yeah.
All right. So now that you've come out with this maiden resource estimate, what's the work that you're going to be doing now? Because you've also, we'll touch briefly on the nickel cobalt, but I know there's a lot of news coming out, ladies and gentlemen. There's a maiden resource for the nickel deposit coming out soon, so he'll be back to talk about that. But today, really, I want to focus on the gold, but there is a nickel component as well. So what's next for the gold deposit?
Well, now that we've put the resource out, and it has surprised us in a good way, a little bit, as to how many ounces we added in the newer areas. So we are going to assign either 1 or 2 drills to carry on the drilling to stretch it out further east, because we're sitting with about 1.5 million ounces, which is quite attractive. But if we could push it further and get into the sort of 3 to 5 million ounce range, we'd be quite a story, I think, just on the gold alone. And I don't really see why not, in terms of, what we see as potential now going east, knowing what we know now.
So how are you going to monetize it going forward? You mentioned the word spin out before from another project. Is there, I guess, how do you monetize it going forward for, current shareholders and future shareholders?
Yeah, I mean, it's obvious that investors don't really like multiple commodities in the same company. You've got to focus on one or the other generally. And that may be more so in Canada here rather than Australia, but that's what I've noticed. However, given the size, I mean, 1.5 million ounces and growing is pretty sizable and deserves, I think, to have its own vehicle. Otherwise, you're not going to get the value for it if it's hidden within a large nickel cobalt company, which is basically what we're about to become. So I think there's a number of ways of doing it. You know, there's spin-outs. I mean, we can split the geology. It's quite clear. So that's not really a problem. We are located right in the heart of some serious gold production. So you have Cote, which is south of us, and that's a 20 million ounce deposit being built.
Oh, wow.
You have Young-Davidson to the east of us that's producing. You have Timmins to the north, which has a number of mills with capacity and a number of gold deposits. So, you know, as far as developing it, there's a lot of options. It could be that we don't have to, you know, we wouldn't have to build a mill, basically. So it could be capital, less capital intensive than what you normally expect.
And I guess for the right price, maybe one of those projects that around you would like to expand their footprint.
Well, everyone's always trying to grow, and we have a gold market again. You know, last year, mid-year, but it was, you know, no one wanted to hear about the gold. And so we just quietly kind of put what we had together and, you know, got on with the nickel, but we quietly, you know, built the resource model for the gold while the market wasn't paying attention.
You spoke about other companies around you, but you've also got your own, like there's infrastructure. It's in a really, really good jurisdiction, not jurisdiction, but location wise.
Yes.
You've got roads, you've got power. And I think it's important that this is not in the middle of nowhere. This project is right smack bang in the middle of everything, isn't it?
Yeah, it's a straight south gravel all-weather road from Timmins, which is one of the largest mining centers in North America, really. It's great access. We have power, you know, nearby. We've got the best politics you could ask for. We're not going to worry. You know, I mean, this is the heart of Canadian mining country.
Yeah.
So we have excellent politics, and yeah, this project could move ahead quickly, I believe.
Now, I might have missed it, but could you just go through what with the drilling and the type of deposit this is? How deep have you gone, and how deep do you think you can go, or is this fairly shallow gold?
Well, it all starts basically at surface. We've drilled been down as deep as below 700 meters with the odd hole, okay. But that's more just to see what kind of, you know, potential we have. I know we had a deep, about 450 meter deep, 2,000 gram hit over what? 2 meters.
What?
Yeah, that was between the two deposits. So we have to figure that out yet. So, and that's typical for these Abitibi hosted deposits where you get a combination of widespread broad alteration mineralization with gold in it. But you'll also get, you know, distinct veins that are very high grade. And a lot of these veins a lot of these gold mines started near surface as high grade vein deposits back, you know, in the olden days. And they have, a lot of them, say like a Detour Lake, have progressed into giant pits. And now they're, you know, as they go deeper, they're going underground again, and they're mining higher grade, you know, undistinct veins or lenses. So, I mean, we have, I think, all of that. That's all, the characteristics are basically the same, you know, with obviously there's structural controls and whatnot that vary these deposits, but in a general sense, they're similar.
Let's get into the guts of Aston if we could, just because I think it's important. Can we just go a little bit corporate for a moment? And that is market cap of 100 mil. It'd be good to know how much money's in the bank. And I know that there's a distinct gold project, and then you've got a distinct nickel cobalt project over here. Are you going to be equally spending an equal amount on both, but now that this gold project looks like it could stand on its own?
Well, I think we have about we have over 5 mil left from last year in the till. We have no expenses to speak of at the moment, except a little bit of overhead. So to start up a single drill isn't going to cost us very much, and we'll see what happens to the market when the nickel resource comes out. But it's all got to be judged by whether, you know, we and the shareholders are happy with the price that we'd want to raise any more money at. So we really have to, we have to see the reaction to the nickel resource that's due out as well. I think before we make too many firm plans about, you know, splitting the two commodities, raising money, whatever, we need to see where this is all going to go once that resource comes out.
Dale, when we spoke last time as well, I said to you, do you think the market's not reacted because you've gone so quickly? And I congratulate you. You've done the work, and you are not letting the grass or the gold grow under your feet. Do you think the market's catching up now?
Well, you can see volume has been picking up, you know, and we've got a bit of a gold market, like I said. But I do think maybe it's a start. I think there's a long way to go, because we did, you know, within 2 years, will have produced a maiden resource on a substantial gold deposit and a very, very substantial nickel cobalt deposit. I think the progress by anybody's standards should be judged pretty good as far as that goes. And I think, yeah, it does take the market time to catch up on all that, because we have to see what it is that we've discovered here.
All right, Dale, it's been great to sort of talk a lot more and a lot more focus on the gold. A lot further to go. I'm assuming you're going to be spending equal amount. I don't think we got to that, equal amounts on the gold and the nickel deposit. Do you think going forward, or you said not a lot to spend at the moment?
It's again, it'll depend on the reaction to the nickel. We could continue to grow it, but given what I think the size will be, it may not be any point in doing that as far as the nickel goes. But for sure, the gold deposit can be, I think, expanded on relatively cheaply and in a fast period of time as well.
Well done. Congratulations on all the hard work. Let's wrap it all up, as I like to do, and give us 3 reasons why you think. I think I know what the reasons are. They're probably the same as last time, but 3 reasons, if you could wrap it up, why people should be sitting up and taking notice right now.
Well, we have now established the gold deposit that we started on, and we've shown that we can grow this gold deposit very quickly with a limited amount of drilling. So I'd say that's one. Obviously, I mean, I'm repeating myself, but we have the nickel resource coming out in the next couple of weeks, and I think it'll be quite good news for the company. And then you've got, you know, we're still relatively cheap. We didn't move up that much on the gold news yet, so I think the value is there big time, especially given, you know, a nickel resource that's about to come out.
Well, there you have it, ladies and gentlemen. Dale, great to see you, and congratulations. This baby just keeps growing into a teenager, an adult, and a gorilla. So well done, and I'll look forward to speaking to you. I'm going to get you back on, and we'll talk about the nickel. We don't normally do them that close together, but I think there's so much news coming out from Aston Minerals. So, ladies and gentlemen, as I said at the start, the ASX code is ASO. Go check out the announcements on their website, Aston Minerals. And also, as always, do your own research, and make sure that you get advice before you put a dime of your hard-earned money into this market. But for now, Dale Ginn, Managing Director, Aston Minerals, congratulations once again. See you in a few weeks.
You bet. Looking forward to it. Thanks.